Mona Mahajan is with us, U.S. investment strategist, Allianz Global Investors. It's great to see you. What a great day to have you with us, Mona. I mean, you're seeing the Dow down, here at session lows, down again for the markets, again the second day, 4 out of 5 days. What is the feeling? Are we worried or not really?
Yeah, coming into this quarter, we were already pretty defensively positioned. We were looking at not only trade, but earnings potentially being weaker than expected. And then, of course, we had in the background the political and geopolitical noise. Over the last couple days, what we've really honed in on is this ISM and the manufacturing number that came out, substantially weaker than expected. What we're seeing is the global manufacturing slowdown has finally really in earnest come to the U.S. shore. The other component of the ISM that we follow closely is the new orders component. That tends to be a leading indicator for earnings as well as economic growth, also very weak. So what will we be watching going forward? Well, one, the employment data on Friday, and two, the non-manufacturing component of ISM, which should come out later this week as well.
Right, exactly. We'll watch for that, no doubt. When we talk about the trade war, I see a lot of red. I'm so glad we're showing this heat map. I mean, you could see all the, the favorites of investors are all in the red. Amazon, Boeing, Microsoft, Apple, Google, Visa, all lower today. The trade wars is something that looms over the markets. The Hong Kong protests and violence have escalated in the last 2 days. Yesterday and today, there were some very violent incidents. And the question is whether or not China can really go ahead and make a deal with so much political unrest.
Yeah, I think generally speaking, it's going to be difficult for the Chinese and the U.S. even to come to the table at this point. The U.S. is facing its set of uncertainty around politics and the impeachment hearing, and the Chinese, like you mentioned, are facing their set of uncertainty.
They're due here next week.
Yes.
They've got to come up with something, don't you think?
I think there's 2 dates that we're looking at in particular, the October 15th tariff increase, and then there's the December 15th tariff increase. That one in particular focuses on the consumer. So think textiles, apparel, footwear, toys. Those are very consumer-oriented goods that could potentially impact the strongest part of our economy. So we'll be waiting to see, can President Trump either through a deal or unilaterally push those back somewhat? That would be favorable in our view.
There's different areas that we're focusing on, such as healthcare and technology. What are your thoughts on those two areas?
I think generally what we had been saying is we prefer, and we continue to prefer, a barbell approach to the stock market right now. On one hand, the tech trade continues to make sense for us from a longer term perspective. There are disruptive technologies that are emerging around cloud computing, cybersecurity, mobile payments that will be interesting and drivers of productivity going forward. But in the near term and on the defensive side of that barbell are what we're calling the recession-proof sectors or recession-resistant sectors, including the consumer staples, parts of REITs and utilities, and then to your point, the healthcare sector has really lagged this year, has some room for catch-up if we get through the next phase of this cycle.
Right. So, for the near term, you're doing this somewhat, sort of a pair trade almost, right? Utilities and real estate to be a little more defensive. You have the tech stuff because you love how it's growing. Healthcare seems okay to you. Going forward into 2020, though, you may back off based on the election, right?
Well, I think we'll see what the election outcome is. I think right now, one of the outcomes of some of the impeachment noise we've been hearing is on the Democratic side. Elizabeth Warren has really gained momentum in the polls. And I think with that
and Bernie Sanders had an unfortunate situation. He had 2 stents put in today. Emergency. So that just boosts Elizabeth Warren's ticket.
Absolutely. And the policies around both Warren and Bernie are similar in the sense that they're looking to do Medicare for all for healthcare, break up big technology, and even on the financial side, deregulation. So those are 3 sectors that we have identified that could be at risk if we see momentum, from that side, and if we actually have a Democrat in office in 2020. So something
this
to watch
administration,
for.
and just in the business sense, has been business friendly. Is that a good way? I mean, you're an investment strategist. You look at the simple things. You look at taxes. You look at regulation. You look at growth. You look at revenue. Overall, for the financials, for example, it's been favorable for business, right?
Yeah, generally speaking, the market backdrop has been pretty good in this administration. What we're watching with more uncertainty is some of the trade policies, whether or not they'll have a conclusion, whether or not they will drive the manufacturing side of the economy downward. But from a market from a market perspective, some of the policies around around taxes and deregulation have been favorable.
How important is it that the 10-year bond hold its low? That it hit around Labor Day, right? What was it, 1.47, something like that? I saw it in the 1.5 range. We had a friend of our network on today, Tony Dwyer, who said that he's going to stay in an offense position until he see if that breaks the low. Then he may change his tune. What do you think of that? How important is that? 1.58 right now.
Yeah, I think that's an important point here. The 10-year tends to be driven by two things: the economic outlook and then what's happening globally around rates. The second part, we know what's happening globally around rates. They're going negative, they're going downward. That's been anchoring the 10-year down. But what's more concerning is what's been happening recently around the economic outlook. If that 10-year starts to move downward, it could be a signal, like we talked about, that this could be a slowdown for the economy. So we are watching, and I think to Tony's point, that 150, 145 level tends to be a technical as well as a psychological resistance. So it's a good one to watch.
Yeah, great discussion. Mona Mahajan,
thank you.
U.S. investment strategist at Allianz Global Investors. Great to see you. Thank you so much.